All right, folks, listen up. Wall Street is buzzing, but not for the reasons you might think. Forget those easy rate cuts everyone was expecting in July. They're gone. And even September, it's a coin flip at best. But here's the kicker. Despite all that, the big banks are absolutely crushing it. I'm talking record profits, fueled by something huge that I'm going to explain. And trust me, you're going to want to stick around until the very end because I've got the inside scoop on how one of the biggest tech giants is betting hundreds of billions of dollars on a single idea and what that means for your money. This is game-changing stuff, so let's dive in. First off, let's talk about those interest rates. Just days ago, everyone on Wall Street thought the Fed was going to slash rates in July. Nope, not happening. Now, there's only about a 50-50 chance they'll cut rates in September. Why the sudden U-turn? Well, we got some inflation numbers this week that were a bit all over the place. One day, prices looked like they were picking up. The next day, flat. It's a wild ride. And this uncertainty is making the Fed hit the brakes on rate cuts. But here's the twist. While everyone freaks out about rates, the big banks just dropped their earnings reports and they are spectacular. We're talking Bank of America, Goldman Sachs, Morgan Stanley, all beating expectations. How are they doing it? Well, for one, the markets have been setting records, and that's a big help. Goldman Sachs, for example, had an amazing quarter, especially in things like helping companies go public and trading. Morgan Stanley, well, a bit slower on those fronts, is absolutely killing it at managing money for regular folks like you and me. And Bank of America, their results showed just how strong American consumers are right now. We're still spending big on our credit and debit cards. That's a huge vote of confidence in the economy. So even without those rate cuts everyone wanted, the big banks are still raking it in. But what's really fueling these banks to new highs? It's something that was dead just a few months ago, and now it's roaring back to life. I'll explain that in a bit, and it's a game changer for your money. Now, let's talk about what's pushing the whole market. Even with rate cut worries, stocks open green today. The Dow, Nasdaq, S&P 500 all ticking higher. Why? Well, part of it is the banking news, but there's more. We've seen solid company earnings across the board this week. Plus, we got some positive news on trade issues that could ease tensions. And guess what else is going wild? Crypto. Bitcoin, Ethereum, and crypto stocks like Robinhood and Coinbase are surging. Robinhood stock is up over 170% this year. Coinbase is up over 60%. Why? Because the government is looking at new laws that make it easier for crypto, not harder. This easing of rules is a huge win for the whole crypto world. On the tech front, NVIDIA, the chip giant, is knocking on the door of an amazing $4.2 trillion in total company value. That's because they're seeing huge orders for their new chips. But not all tech is soaring. Some chip equipment makers are actually warning about lower demand because of global trade uncertainty. It's a mixed bag out there, but overall, there's a lot of good news. So let's circle back to what's really helping those banks. Investment banking is back. The window for companies to go public is finally opened up again. It's not about if companies want to go public, but how many are actually ready to jump through that window. And we're seeing an acceleration in that. Many of the deals that have happened this year have been huge successes, which makes more companies want to try. But here's the catch. These private companies aren't just rushing in. They want a clear path to making consistent profits for the next year or so, and they want to make sure investors will actually support their deal. A few years ago, many hotshot private companies got crazy high valuations, and they're still trying to reach those levels in the public market, so they're being patient. Now, you might be looking for red flags. Are there any? Well, some folks are still worried about those on-again, off-again trade issues the government keeps announcing. And frankly, bank stocks have had a huge run already, so some of them are getting a bit pricey. But here's the thing. Strong earnings mean most experts are actually raising their price targets for these bank stocks. So it's hard to find a lot of fault. In fact, for banks, higher interest rates for longer are actually good news. They can charge more for loans, and they're seeing great loan growth. They're perfectly fine in this environment. And get this, the biggest banks might even get a break on how much capital they have to hold, which means they could lend out even more money. That would be a huge boost for them. This means the cards are stacked in the favor of the big banks right now. What about the smaller regional banks? Well, they're struggling a bit more. The big banks like JP Morgan are opening hundreds of new branches and just keep gaining market share because they have way more products for average consumers. Over the last 5 years, about 500 smaller banks have been bought out or shut down. That's 100 every year. So the big boys are just getting bigger. When it comes to where to put your money, some analysts are saying that Goldman Sachs has had such a huge run that it might be getting a bit expensive right now. But others are pointing to Bank of America as a hidden gem, a value play among the big banks. It hasn't run up as much as JP Morgan or Goldman Sachs, but the trends look good, and its total value compared to its earnings looks attractive. So it's all about patience with that one. But here's the big one, the juicy detail I promised. Let's talk about Meta, Facebook's parent company. Their stock has been on fire, up over 36% in just the last 3 months. But all eyes are on their upcoming earnings report. The big question, are they spending too much money, risking their short-term profits? CEO Zuckerberg is being called the ultimate wartime CEO. When he sees an opportunity, he attacks it like no one else. And right now, that opportunity is artificial intelligence. Zuckerberg himself said they're going to spend hundreds of billions of dollars on building out their data centers over the next few years. We're talking massive facilities, some the size of Midtown Manhattan. This isn't just about hiring a few smart people, it's about building the physical infrastructure for the future of AI. He's basically saying the headlines about us hiring a bunch of AI talent, that's small potatoes compared to the hundreds of billions we're spending on hardware. And yes, they are buying up talented teams from other companies, not just hiring individuals. It's a full-on arms race to get the best AI minds and the best AI tech. Google, Amazon, Microsoft, they're all doing it. They have to do this to stay competitive. So while this massive spending is definitely going to hit Meta's bottom line in the short term, they are making a colossal bet on the future. They believe the AI opportunity is so huge, it's worth sacrificing some immediate profits for long-term dominance. It's a gamble, but if they pull it off, it could be massive for the stock. This is the biggest race of the next decade, and Meta is going all in. That's the real story right now, folks. All right, that's a wrap for today. We've covered everything from rate cut shocks to big bank profits, crypto booms, and Meta's insane AI spending. Remember, stay informed, stay smart with your money. If you found this breakdown helpful, make sure to smash that like button, subscribe to the channel for more market insights, and hit that notification bell so you don't miss any of my future videos. Until next time, keep making that money.